floor is open for questions, comments, and observations. John, let me ask each speaker to identify herself or himself, and then fire away.
I'm John Williamson. I'm here at the Peterson Institute. I agree with just about everything that I think you said in your excellent speech, but what I want to know is why the European countries were instrumental in sabotaging the attempt to reform the IMF quotas in the recent, which has involved this trivial change at the end of the day. Given the sort of sentiment that you voiced, does nobody else in Europe, or do very few people, share this vision of how much more powerful Europe could be if it could consolidate its representation in the IMF? Or what is the reason, what is the explanation for this apparent paradox?
Well, first of all, the European member states at the IMF level has been instrumental in having an agreement on quotas that I hope tomorrow can be discussed with positive attitudes and can be adopted. We have been able to coordinate the European position on this particular point during the last period. If I remember well, last October we expressed here in the last annual meeting of the IMF a common position. In Singapore 1 year before, we accepted the first step of the agreement on quotas. Now we have again presented common positions, and we have accepted a bargain, a compromise solution to the present distribution of boys and quotas. And we know that some of our member states are not very happy with the compromise, but all of them endorses the compromise. Another question is to convince some of our member states about the need to consolidate their representation in one single constituency at the euro area level, or in a more reduced number of constituencies as an intermediate solution. And there are a lot of national-oriented arguments that I will not give to you, because I only speak on my own behalf as Commissioner, as I'm a European citizen, and from both points of view, I am totally in favor of a single chair representation. But I heard when I meet with the 27 finance ministers of the 27 European countries that some of them have some national arguments that maybe one day, if you invite some of them here, you can discuss with them. I hope you will convince them. I will try to do so. You should help me.
I don't know if you'd want to hazard a prediction going forward. Looking ahead 5 or 10 years, as you do in your speech and in your observations about need for policy reform, can you see a continued progression on this issue, so that if we're here 5 years from now, 10 years from now, can you foresee further substantial progress toward a single representation? And some of those national arguments perhaps being overcome or diminishing as the path of European integration proceeds?
Well, that I can see is a clear improvement in the way the European member states consider which is the common interest of the EU, and in particular of the euro area, when dealing in the IMF or in other multilateral economic and financial institutions with their partners. So if I compare the possibilities of achieving common positions right now with the situation 10 years before, the improvements are obvious, are very, very important. But this awareness of the common interest, because we are sharing not only a single currency, but a single market, a lot of policies, economic policy orientations, common interest in achieving good results because of the increasing interdependence of our economies within the borders of the euro area, within the European Union, with the other partners in the world. I think the awareness of the importance of having a strong representation and voice to support our common position is increasing and will increase in the future. But I don't expect coming here in October and telling you that everything has been solved.
Could I ask one more specific question on this? Over the last, I guess, 2 years now, the IMF launched its new program of enhanced surveillance and set up the new group of 5 participants. United States, Japan, China, Saudi Arabia, and Euroland. United Kingdom was outside that. It was Euroland. So in a way, that was the first instance in which Euroland per se was asked to present a single voice and position. How did that work out? How has that experience informed what we're talking about, and does it give any pointers toward how the process might move forward?
Well, since the beginning, I was, and we were, at the Euro area level, very happy of this initiative of the IMF, launching this process, so-called multilateral consultations, to discuss the approach of the main players in the global economy towards the unwinding of global imbalances in an orderly way. I refer to the importance of this issue. And we worked for the first time as Euro area. We were represented in these multilateral consultations in the same Euro area chair. The member states, the Council, the Eurogroup members, through one representative of all of them, the European Central Bank and the Commission. And this tripartite troika representation of the Euro area was participating in the discussions with the US, Japan, Saudi Arabia, and China. And the conclusions that this process presented to the IMF board just 1 year ago here in Washington continues to be valid. What was the question was that this process was an informal one, was not a formal procedure of surveillance under the status and the rules of the IMF. Was an informal process, very useful. We reached a lot of agreements in the way to deal from our respective areas to the orderly unwinding of global imbalances, but the final agreement was a consensual one, not a formal one. The new approach to surveillance, that was a more formal approach adopted by the fund, has found some more difficulties. Why? Because the exchange rate surveillance of one major economy cannot be isolated from the exchange rate surveillance of other important economies. The IMF cannot focus the exchange rate surveillance in one important economy and forget the considerations that should apply for others. But I hope, I don't know about the intentions of the new managing director, Dominique Strauss-Kahn. This morning I had a meeting with him, but we didn't discuss on this. But it's important to know if in this reshaping of the mission of the fund, of the priorities of the IMF, this multilateral process of consultations on the same issues or on other issues will continue. I think it was a useful experience that should continue, and this will give probably to the IMF a very useful approach to the topics that should be considered priorities for this institution.
Okay, yes.
Fran Burwell from the Atlantic Council. You make a very good case for the international role and success of the euro. But for people on the outside looking in, one of the big question marks is the role of the UK and the continued reluctance of the UK to even have a debate about joining the euro. Clearly that affects what you've just been talking about, which is the provision, the consolidation of one representation in international institutions, but it also affects the euro as kind of its political stance in the world, if I can put it that way. And you make the argument that the euro is a political success as well as an economic success. What will it take to get the UK to think seriously about the euro? What can Euroland do to change opinions in the UK and eventually perhaps bring them in? Or doesn't it matter in the end? Can you continue long term with one major currency, a member state like the UK, outside of Euroland?
Well, this is a very important question. But I think it's very important for all of us as Europeans. It's very important for all of us as responsibles of the euro area of EMU. But it's even more important for the British citizens. And I'm speaking honestly. Why the UK is not member of the euro area? Well, in the short term, you can argue with economic consideration of the lack of synchronization of the cycle. But during the last years, till last August, during maybe 4 or 5 years, the degree of synchronization and the degree of stability of the pound against the euro and the exchange rates was almost perfect. So the question is political, and the question goes beyond the advantages and the benefits for them and for us of having the UK and the pound within the EMU. The question is, which are the interests of the British citizens in this global world, not having a full representation, a full voice, a full capacity to discuss with the other European countries at the EU level. Because I have the experience during these 4 years of being Commissioner for Economic and Monetary Affairs. Once a month we have a meeting of these Eurogroup ministers, and the day after, once a month, a meeting of the ECOFIN minister. It means the finance ministers of the members of the European Union, members of the euro area. Now, right now are 15, non-members of the euro area are 12. In the coming years, this proportion will change in favor of the number of members of the euro area that will continue to increase. Which are the advantages of the UK, not only in economic terms, in political terms, of not being there, not being fully integrated in our discussion? London is the most important financial place in Europe, and one of the most important in the world. The capacity of the UK to participate at the European level in discussions regarding financial issues suffers a lot because of this lack of presence in the core economic and financial business in Europe, business area, in the political sphere, in the public sphere in Europe. And I don't see what can be their medium to long-term interest of not being there unless their political decision would be to be outside the EU. But I cannot imagine this decision. So, as the British are very clever and very pragmatic, I think that in the coming times things will change.
Hello, Rob Westcott, Keybridge Research. I agree with your political assessment. This is a great contribution. But let me bring you up to current times and talk about current economic conditions for a second. I just spent the last 5 days last week in 5 of your countries. And from Scandinavia to the Mediterranean, we're seeing very sharp declines of exports. In Scandinavia, they're talking about a collapse of exports of paper and wood products. In Spain, there's the collapse of the housing sector, which is 10% of GDP. In Italy, they're talking about very sharp losses of international competitiveness because of the euro. In Germany, they're talking about weakness in the consumer sector. When I was at the International Monetary Fund, we used to talk about an index of monetary conditions that took both interest rates into account, but also the exchange rate. And I'm curious your thoughts on the degree of monetary conditions in Europe, taking the tightness that's coming in from the currency, and also your perspective on whether we have the proper adjustment mechanisms. Thank you.
Well, first of all, it's true that we are in a slowdown. We are suffering the consequences of the August financial turmoil. We are suffering these consequences not only in the bad functioning of the credit markets and financial markets, not only through some losses and write-offs in some financial institutions. We are suffering because this affects the confidence, and this affects the real economic activity. And at the same time, we are suffering, we are starting to suffer the consequences of this pronounced slowdown here in the US, and we are receiving the negative consequences of the very strong shock coming from abroad in terms of prices, oil prices and commodity prices. So we are in a difficult position, indeed, and our projections, our economic projections has been revised downwards in November and in February, and unfortunately I have to present at the end of this month economic forecast again, and this would not be the very optimistic press conference that I would like to offer to my friends in the press, that some of them are there. So we are trying to weather this very strong storm, and we are doing so with some instruments that we didn't have in past occasions. So when we compare this turmoil or the crisis, if you like to talk clearly, with the situation at the beginning of this decade, or with the situation that we had to weather in the 70s with the first and the second oil shock, we have a single currency that is protecting us, as I said in my speech, against our recurrent exchange rate crisis and turmoil, and we had in mind in many of our countries the negative consequences of that situation in the past. We are weathering this turmoil with a pretty good fiscal position, not in all our member states, but in the big majority of our member states. We are weathering this with a situation in our labor markets that has improved a lot, and I gave the figure of 16 million new jobs created during the last 8-9 years. And we are weathering this situation with an experience that we will not want to repeat, and the errors committed in the past reactions of the past episodes of difficulties. So we will have less growth, we are having more inflation, but I can say in Europe we will not have a recession. And I think that next year we can repeat the same in public. We will not have a recession. We'll have less growth. We'll have less employment creation. We'll have maybe slightly more unemployment than this 7%. That is the lowest level in the last 15, 20 years. We are having this inflation that creates problems. That creates problems in the weakest sectors of our societies, and we are trying to avoid second round effects, and we are trying to cooperate from the point of view of the executive branches and from the point of view of the Commission and our instruments to a more stable environment of inflation expectations, trying to facilitate the task of the European Central Bank. So I am not irrealistic. I know what is coming. Then the end of this year, 2008, probably will be worse than we were expecting a couple of months ago. But I repeat, we will not see a recession unless new episodes, new turbulences, new crises coming from the financial market situation will emerge, where the origin of these causes lies. That is here. It's not at the other side of the Atlantic. Some of the European financial institutions are affected because they invested in CDOs and other kind of products, but so far this is a problem that can be dealt with the present instruments without excessive reason of concern about our possibilities to succeed in this task. The ECB. We respect the independence of the ECB. We are very happy in having this institution. This has provided us a very good environment for price stability. I never speak in public about what the ECB should do. I assist to the meetings. Yesterday morning I was in Frankfurt in the last monetary policy meeting of the Governing Council. But so far, looking to the effects of the monetary policy decisions in the past, that indeed we analyze the consequences of these monetary policy decisions and we publicly express our opinion, I think that the ECB has done a very good job in the past.
Dick Cooper, Harvard University. During the last couple of years, the euro has appreciated a lot against the U.S. dollar, and it's appreciated against the Japanese yen and against the Chinese currency. And at today's level, as we heard in the previous question, a lot of European firms are feeling that appreciation. My question to you is an institutional one, because this is something of a mystery to outsiders. When it comes to exchange rate policy, how does it work in practice?
It means if Europe one day will decide, for unknown reasons, to abandon a flexible regime of exchange rate, this should be decided by the Council of Ministers in a formal decision under the proposal of the Commission, and the ECB in this case should be consulted, or under the proposal of the ECB. So in this case, both the Commission and the ECB can send proposals to the Council. In general, it's only the Commission who sends the formal proposals to the Council, but the change of the exchange rate regime. But as we will not be in this universe, we are in a flexible exchange rate regime. We don't want, and we will not change the exchange rate regime. What is the situation? The Council can give orientations. What is this? We don't know. It's an ambiguous term used as a compromise when the Maastricht Treaty was negotiated many years ago. The daily management of the exchange rate belongs to the Monetary Policy Authority because they have to preserve price stability, and this is one of the elements that they take into account when considering the economic pillar and the monetary pillar of their analysis. If the Council decides one day to give orientations, so not a formal change of the regime, but some orientations, they should in any case respect the price stability objective. They cannot, through this orientation, change the priority for price stability. That is the mandate that the ECB has received from the treaty. In practice, I don't expect the Council, considering the possibility of writing down these orientations, what happens and what will continue to happen. That we discuss about the exchange rate evolution, the impact. For instance, we discussed this last Eurogroup a few days ago. I, as Commissioner, presented a document analyzing the evolution of the real effective exchange rate, the nominal effective exchange rate, what is happening with the dollar, with the yen, with the yuan, so on and so forth. We incorporate also some other considerations from the economic analysis, and we provide the analysis to this discussion, and this discussion took place at the Eurogroup. But today at the G7 and tomorrow in the IMFC, both the President of the Eurogroup and the President of the ECB should participate in a discussion about exchange rates with other partners. In this case, the Eurogroup has decided, with the participation of the President of the ECB in the discussion of the Eurogroup, as always, terms of reference, which are the lines that should be considered as our own position in this discussion. And this is what happens.
Could I maybe, without asking you to give us all the details that were in your report to the Eurogroup, I do note that you said in your speech the euro has already contributed significantly more than its share to the ongoing global adjustment process. Implies that you think the euro is now overvalued.
Yes.
Care to elaborate?
This sentence was underlined in my note.
Care to elaborate? How much? Against which currencies?
No, against our partners, when we consider the real effective exchange rate, according to our estimates, we are overvalued.
Final question goes to the sponsor of the series, Marina Whitman.
Thanks, Fred. Two comments you made, and they weren't right next to each other, was that the European Union had done significantly better in job creation than the United States, and the United States had done better in productivity growth. And the question is, do you think there's some structural reason why these are sort of a zero-sum game? And if not, what would it take to make it possible to have both accelerate their improvement at the same time in Europe?
Thank you very much. Well, first of all, regarding employment levels or employment creation, the US were doing better during many years in terms of employment, and in the last 10 years, Europe, and the euro area in particular, is catching up, increasing the employment levels, not only because of the cyclical impact on employment, that is evident, but because of labor market reforms that have been introduced over the years. Not only after the adoption, the formal adoption of the Lisbon strategy in May 2000, that incorporates clear guidelines for labor market reforms in Europe, but even some reforms were adopted in some European countries before the Lisbon strategy was launched, and these reforms have continued in these years. What kind of reforms? In some countries is the disencouragement of pre-retirement schemes that has allowed us to increase employment levels in workers above 55 years old. In other cases, making work pay, so reducing the tax wage and lowering the non-wage cost of labor. In other cases, introducing less regulation or adequate regulation in labor markets, reducing the level of legal protection, not effective protection, but legal protection of workers. In other cases, through the encouragement of part-time jobs or fixed-term contracts. In other cases, through the strengthening of active labor market policies, training, retraining, adaptation of the skills of the workforce to changes occurring in the productive system. So we have a wide array of labor market reforms in different countries, and we have in most of our countries also a wage moderation, negotiations of wages through collective bargaining in line with productivity, not in all the cases, but in some of the cases. So all in all, this is given to us a good picture of improvements in the labor market, in employment creation, that is not only due to the cycle, and our structural unemployment has decreased clearly in Europe over these years. On the other hand, productivity. We are lagging behind. We observed some improvements in productivity during the last 2-3 years, and we were optimistic at the beginning, looking into these improvements, saying, well, also some structural reforms in the product markets or in the services are improving structural the productivity from the structural point of view. This was not true. Mainly our analysis showed that the improvements are cyclical. And where the differences with the US are established, roughly speaking, in the use of new technologies and in the production, the sectors producing new technological manufactured products, we are lagging behind. on average. Some European countries are doing very well, but on average we are lagging behind. In the productivity and the financial sector, I don't know with the next round of figures, but till now, the productivity in financial services here was better, was increasing more than in Europe, and in the retail and wholesale trade sectors. These three factors explain completely the difference in productivity on average. We will learn the lesson, we will catch up in the coming years, I hope so. We are doing our job. We have improved and revised the Lisbon strategy. We have increased national ownership. We have asked all member states to adopt and implement programs for structural reforms according to their own priorities. We are monitoring this evolution, but this requires strong efforts over the medium term. This is not a kind of a strategy that can deliver results the first year.
Mr. Commissioner, we deeply appreciate your taking the time from your very busy weekend to join us. It's been a great pleasure to welcome you back to our podium. I want to thank again the Whitman Foundation for supporting this particular event, and we look forward to continuing the dialogue with you frequently in the future. Thank you again for being with us.
Thank you very much. Thank you.